president planning to go to the Middle East to mark the Israel-Hamas peace deal in the next few days. Joining us to talk about how a cooling of tensions in the Middle East might impact the energy markets is Helima Croft, RBC Capital Markets Managing Director, Global Head of Commodity Strategy. Helima, good to see you. Thanks for the help today.
Thank you for having me on.
I wonder what you make of the action in oil. Yesterday, some were taken aback that there really wasn't much, but that's clearly different today.
I mean, big move today in oil. I think it's reflecting a view in the market that this peace deal means that people can de-risk the Middle East, de-risk geopolitical turmoil for oil. Certainly, this is a very important story for the broader Middle East. The bigger question, though, is, does Israel basically say, we're done for now? Or are they still concerned about Iran? Do we have the potential for later on this year in Q1, another Israeli strike on the Iranian nuclear facilities? We've just had a snapback of UN sanctions on Iran. So I would say we still need to watch that story. But certainly from the standpoint of the broader Middle East, like, this is a very important development, this deal that President Trump ushered in.
If Israel were to say we have secured enough security, where do you think we could be headed? How much into the 50s, let's say?
I mean, again, there is this whole question, if we go back to the fundamental story for oil right now. I mean, we are watching what happens with inventory builds. There's a big debate right now. China has been buying for its strategic petroleum reserve. Will we see a slowdown in that? Will we start to see major inventory builds in visible markets? Like, that is the kind of question about where we land in the fourth quarter. I would say at the start of the week, though, we did have OPEC basically making a cautious move, only increasing production by 137,000 barrels. It's probably going to be less than half of that because only Saudi Arabia at this juncture has spare capacity. I would say if we do get to that inventory build situation, watch for OPEC to potentially come back in at the year-end meeting and take barrels off the market.
Helima, what is the status of risk in Eastern Europe right now as that war continues between Ukraine and Russia? Is there a likelihood that additional supply can come off?
Leslie, I think that is the most important question right now, near term, when it comes to the geopolitics of oil. Ukraine has made the decision, clearly with the backing, it looks like, of the United States, to aggressively target Russian energy infrastructure, targeting refineries largely, but some also pipelines. And the question is, are we going to potentially see an acceleration of these attacks? Ukraine is expected to get new missile technology. Some have said that will allow them to be even more aggressive in targeting these facilities. And so when we look at Russian energy production, we would say there is a significant risk that that will be lower because of these attacks. And Ukraine has every incentive to keep hitting this infrastructure because Russia, it has a huge manpower advantage in this war, and they're using the proceeds of its energy sales to pay for soldiers to fight.
Yeah, Putin with some comments today about what happens if Tomahawks make their way to that part of the
100%.
conflict. Yeah. Helima, thanks. Talk soon.